Chip stocks are rallying on the final trading day of the month. You've got Nvidia leading the charge. Now, today's moves come amid a tough couple of weeks for big tech. The Nasdaq actually on track to have its worst month of the year. Comparing that to this rotation that we've seen into small caps, the Russell 2000 actually on track for its best monthly performance of 2024. So for more on some of the rotation that we've seen and what's ahead, we want to bring in Michael Arone. He's State Street Global Advisors Chief Investment Strategist. Michael, it's great to have you here. So we're seeing some excitement surrounding the chip names. Once again, you've got Nvidia really this leg higher clearly at the open. I'm curious what you make of that recent rotation out of tech and maybe whether or not today's buying action signals that we could see a leg higher here for some of the names that have been beaten down.
Well, I certainly think that there was a trifecta of positive news that led to the leadership rotation. That was the cooler than expected inflation report. Then certainly Chairman Powell set the stage for rate cuts. We'll get more information today at the FOMC meeting, but he suggested that one of the risks was staying too high for too long. And he also let the markets know he didn't need to wait for inflation to get to 2%. Now you've seen interest rates falling and you've seen a rotation in leadership. And what's been interesting shown us so far in this earnings season is that good hasn't been good enough for high-priced Mag 7 stocks. So they've beaten on top line and beaten on bottom line, yet subtle negative kind of slowdowns, whether it's cloud computing or YouTube advertising, has really kind of been a hindrance for the stock. So I think the rotation has some legs.
Okay, and so where is the rotation into from what we're seeing in the flows right now, Michael?
So I certainly think when I look at the earnings, one of the things that's been interesting is financials started off the quarter as not expecting all that much. And Jared just showed, right, financials is one of the top performing sectors this month. So we've started to see that earnings expectations for financials have increased dramatically, and banks in particular. So I think as the yield curve has steepened, so short-term rates are falling, long-term rates are falling, perhaps not as much. Profitability is quite high. They return capital to shareholders through dividends and buybacks. And I think financials is one of those areas that remains attractive, and we're seeing part of that rotation into.
Michael, where within financials are you seeing the most opportunity? Do you like how the positioning of some of the regionals, or is it more some of the larger U.S. banks where you're seeing the most opportunity given the rotation and given what we're expected to hear from the Fed?
I think it's more of the larger banks, in terms of my expectation is that their investment banking activities picking up, M&A activities picking up, their earnings are picking up from that perspective. And I just think that they have a broader kind of set of business. So I think kind of large money center banks are attractive. The JP Morgans, the Bank of Americas, their earnings were good. They guided higher, highly profitable. The economy continues to do reasonably well. So loan growth should be okay, particularly as rates come down. And what's happening with interest rates is improving their overall financial health and profitability. We also like insurance. That's an area where they have pricing power. And so anyone who's got home insurance, car insurance, unfortunately, it's been going up and going up quite significantly at a time when their cost structure hasn't changed all that much. So we like insurance, and we also like large banks within financials.
Michael, we got a big Fed decision today. Well, not a huge Fed decision today. Let's be real. I mean, we're looking at the probabilities. It's essentially duddy right now. So how much of what the Fed says today really tees them up for a cut in September?
So, Brad, I think here the risks are kind of skewed to the downside. And the reason why I say that is the market is pricing in with 100% certainty that the Fed will begin to cut rates in September. And so here it leaves the Fed very little wiggle room today. So I think everybody's expecting that they'll signal in the FOMC statement that rate cuts are coming. They're likely to say, hey, we've gained greater confidence that inflation is headed towards the 2% trajectory. I think Powell doubled down on that in the post-meeting presser. But if he doesn't, I think you could see a negative reaction from markets. So the fact that there's 100% agreement that the Fed will cut rates in September suggests that there's very little wiggle room for the Fed today. So they better deliver. Otherwise, you're going to see a market reaction.
Michael Arone, who is the State Street Global Advisors Chief Investment Strategist of the U.S. Spider Business. Thanks so much for joining us here this morning. Appreciate it.
Thanks, Brad.